It has been exactly 1 year since the Ethereum blockchain transitioned from proof of work to proof of stake. So let's take a look now and see what the results have been so far. Now, this website, Ultrasound Money, is a great tool, a great resource for all things Ethereum. And so if you're trying to keep track of the Ethereum blockchain and to understand what's going on in the Ethereum ecosystem, then I highly recommend bookmarking this website. Now let's zoom out and look at the activity on the network since the merge, which was exactly 1 year ago. Now, as you may know, prior to the merge, the transition from proof of work to proof of stake, Ethereum was an inflationary blockchain, meaning that its supply was increasing little by little year after year. However, since the transition to proof of stake, the supply dynamics of the network have changed. And you can see that actually the supply has been steadily decreasing over the last 365 days. And net of everything currently, there is almost 300,000 fewer ETH in existence, in circulation today than there were 1 year ago. So the network is actually now deflationary. And the way that this works is ETH is burned through transaction fees. So when people buy and sell tokens or send ETH or other assets or trade NFTs, any interactions with the Ethereum blockchain, every time there's a transaction fee, a portion of that is burned and a portion of that is issued as a reward to the Ethereum network validator. And over the last year, the burn has exceeded the issuance. So almost 1 million ETH burned, while nearly 700,000 ETH has been issued as rewards to stakers. Now let's compare that with what things would have been if ETH continued on the proof of work trajectory. As you can see, the network would have been inflationary to the tune of over 3% over the last year. But instead, with the transition to proof of stake, it's been deflationary by negative 0.248%. And if we compare that to Bitcoin, you can see that Bitcoin has inflated over the last year by 1.71%. So ETH is now actually ultrasound money. But what can we expect in the future? Will this trend continue? Let's take a look. What this graph here shows is the transaction fees of the Ethereum network over the last 365 days. Any dots that appear in blue are inflationary, and any dots that appear in orange are deflationary. And the further they are above or below the line, the more inflationary or deflationary they are. Now, as you can see, when there's low demand on the network, meaning there's not as many people transacting because it's a bear market and people just aren't as interested in cryptocurrency, people aren't trading as much, people aren't buying as many NFTs. So when there's a lull in activity, then the network can be slightly inflationary if the gas fees are below the ultrasound barrier, which, as this indicates, is 20.6 Gwei. But when the gas fees are above that barrier, meaning there's more demand on the network, say a hot NFT is minting or everyone is trading shitcoins, which is exactly what happened with this massive spike here back in the spring of this year. Well, when there's massive spikes in demand, then the network can become massively deflationary. And there's an asymmetry here because the network fees are never going to go below a certain point. At this stage, with how mature the Ethereum network is and the number of different applications there are on it, ETH gas fees are unlikely to go below, 4 or 5. And that is in the absolute doldrums of a bear market. But the asymmetry is that there is no cap to this. So as demand increases, if there's something happening and a lot of people want to make transactions, then you're going to see a lot more orange dots like we see in this graph here. And these spikes are going to burn a massive, massive amount of ETH. And this is why overall you can see maybe there's almost as many blue dots as there are orange dots, but the orange dots are significantly above the line, and that is why we're seeing more ETH burned than ETH issued, and why there's a 300,000 net deflationary impact on the network over the last year. And this website also shows some projections based on the demand on the network and where there might be an equilibrium where the new issuance becomes more or less level with the ETH that's being burned through transaction fees, through gas. And so it's estimated that the supply equilibrium will be somewhere around 72 million ETH, whereas currently there is about 120 million ETH in circulation in existence. So that is where we are now, and that is what the projection is for the near future. We're going to see the amount of ETH in circulation continue to slowly decrease over time until it reaches that equilibrium point. And so when people say that ETH is ultrasound money, they're referring to the fact that the network is no longer inflationary, it has actually become deflationary. And in terms of an economic model, it really is a thing of beauty. It's super interesting the way that it's worked. The supply and demand dynamics that go into this are incredibly interesting. Now, as one final thing, let's take a look at what have been the biggest sources of burned ETH over the last year. Now, we can see the burn leaderboard here. So of the almost 1 million ETH that's been burned over the last 365 days, the main sources of that have been trading on Uniswap, number 1 and number 2. Number 3 is ETH transfers, so people just spending some gas fees to send ETH from one wallet to another. Then we have Tether, which is a stable coin, another couple of Uniswap routers. Then we have some NFTs popping up with OpenSea at 23,400 ETH burned. We've also got Blur as the other big NFT marketplace, and we've got some layer 2 starting to show up here too. So we've got Arbitrum. MetaMask, of course, is in here as well in the top 10. And as we go down the list, you'll notice a number of names that I'm sure you're familiar with. Now, what's crazy actually is that on this list, you have individual MEV bots. So for example, this individual bot has burned actually over 7,000 ETH over the last year, which is crazy. That is millions of dollars worth of ETH burned in transaction fees. And as the cryptocurrency markets move forward and the Ethereum ecosystem evolves, if we go into another bull run, we're going to see more deflationary pressures on this network. It's really the bear market that's left it being somewhat inflationary at points, but if we go into a bull market, there will be pretty much no more inflationary days. The amount of supply will be down only, and arguably if you're a holder of ETH, someone that's holding or maybe holding and staking, then that will be beneficial to you and will probably have an impact on the price. Thanks so much for watching. Hopefully you found this video interesting and have a great day.